Bank, the small finance bank's net interest income coming in at 483 crore rupees during the quarter gone by. PAT shrinking to 41 crore rupees compared with just over 100 crore in the comparable quarter a year ago, but disbursements certainly looking much better than they have in the recent past. We're joined by PN Vasudevan, who's the Managing Director and Chief Executive Officer of Equitas Small Finance Bank. Mr. Vasudevan, thank you so much for taking the time. Your initial thoughts on the quarter gone by, seemingly asset quality is still something to be careful about, cautious about. Is that basically what has dragged profitability? Certainly on the disbursement side, things seem to be looking much better.
Hi, good morning. Thank you for having me on this call today. Yes, the second quarter was definitely a quarter of improvement all around. Basically, the country itself was seeing a much better situation with the lockdowns being much less in the second quarter compared to the first quarter. And obviously, that's reflected in the performance of our bank also. Our collection efficiencies went up sharply between the first and the second quarter. Our GNPA was 4.6% in June compared to 3.5% in March. So it had gone up by nearly 1% in June. And we were able to manage to hold it at the same level in the quarter ending September, which I think itself is a very good comforting position for us because our GNPA did not really rise up too sharply in the first quarter. It rose only marginally by 1%, and we are able to hold it at that level in September. And our overall rescheduling under the RBI guidelines. So we have rescheduled about 7% in the first half between the first and second quarter. And that had a provision of about 196 crores we had to make on the rescheduled accounts. And that really kind of impacted the PAT. But these are provisions which are made on a contingency basis, and they are not really NPA provision in that sense. So hopefully going forward, if we are able to recover and regularize most of these rescheduled accounts in course of time, some of these provisions might come back also into the books at a later point in time.
Okay. I just want to understand and speak a little bit more about the GNPA number. It's, from what I can see, at 4.82% at the end of the quarter. It's still a substantial number compared with what you've seen in the past. I just want to understand how things are going to go from this point on. You say that collection efficiency is going up. Could you give us a sense of the glide path that you anticipate for GNPA, for the overall GNPA number, considering also, of course, that your disbursements are going up at a pretty rapid rate? So what's the guidance on that front, and what is the credit cost going to look like?
So, historically pre-COVID, our GNPA had never crossed 3% ever in our last 13 years of existence. It's always hovered around the 2.5% levels. Post-COVID, we saw it going up, and 4.6 is the highest GNPA we have ever had in the history of the company. But it is bound to trend down as we go forward, provided the country continues to remain open for normal life. Because most of our borrowers, that they are all from the lower income segments, daily income earners or daily business earners. So when there's a lockdown, they just have to shut their shop and there's nothing that they can do about it. But when the markets are open, they come back pretty strongly. And that's what we have seen in terms of our collection efficiency going up in the second quarter. Going forward in terms of the GNPA, yes, the GNPA is actually also a combination of how much of GNPA we recover, as well as how many more accounts slip into GNPA from our typical SMA, let's say 1 or SMA 2 buckets. So we have our SMA 2 bucket is 1.5% as of September, which was 2.5% in June. So that SMA 2 bucket has come down by about nearly 1. And that's a little bit of a comfort going forward in terms of what's the potential GNPA slip that we may end up seeing. But their overall stress, I'm not saying has completely gone away. We are definitely not back to the pre-COVID level, because in the pre-COVID levels, my 1 to 90 bucket was only 6% of my book. And it had gone to 26% in June. And it has come down sharply to about 15% in September. But at 15%, it's still high compared to my traditional 6%. I'm talking the 1 to 90 bucket. So there's a lot of effort still in the system to try and pull back our overdues from 1 to 90 back to that 6%. And only when we do that, we can say that we are really completely back to normal, and we should not see any further stress in terms of even the people handling the business on the ground. There should be no stress. So there's a lot of work to do. I'm not saying that we have completed everything, but yes, definitely the trend is good and the positions are comfortable. And with the country hopefully fully vaccinated shortly, and hopefully no more corona lockdown, I think we should get back quite fast.
Sure. Also wanted to understand really, Mr. Vasudevan, that, given your credit growth that you've seen in the second quarter, where exactly is most of the demand coming in from? If you could just give us a segmental classification.
See, we are majorly into three business lines: microfinance, small business loans, and commercial vehicle finance. So, microfinance is now down to 18% of our total book. My small business loans, which are really small business loans given for small businesses secured by house property, that's about 45%, and commercial vehicle finance is about 25% of our book. So, these are the three major lines. And in the second quarter, we actually saw demand coming up from all the three segments quite equally. I wouldn't be able to say one versus the other. So I think historically, if what we have been communicating consistently over the last so many years is that the segments that we deal with are segments which are extremely underserved by the traditional banks, and they have been underserved for decades and decades. So there's a huge amount of pent up demand which has been built up over so many decades of years. It's not just a recent, kind of a build up. And so the demand always remains very high. So I would always say that disbursing for a bank like ours, is not something that is that's very difficult. It's more a question of how much we want to disburse, how much of comfort we have on our asset quality and quality of book. So basically, that determines our appetite to lend, not so much from the market side. So I would say that the demand is actually coming from all the segments that we are dealing with currently.
Sure. Um, Also, given that your other income this time around has seen a substantial bump, about 54 crore rupees last year to 101 crore rupees in the first quarter to 148 now, then in the second quarter. Uh, would you be able to continue with this kind of growth going forward?
Yes, see, the other income, we didn't have any one-off. There was no PSLC sale income, or there was no other one-off. So it's basically the other income is arising from our loan itself, processing fees associated with the loans. It's also coming from our third-party sale of mutual funds and insurance products. It's also coming from our digital foray, where we have tied up with certain partners, where we do transactions, enabling transactions through them, where we get some commission on the transactions. So basically, it's a normal BAU kind of fee income that we have generated in the second quarter. There is really no one-off. And so hopefully, if business metrics continue to perform as they have been, this should be something which is repeatable.
Having you on the show. Thank you so much for taking the time out. And here's wishing you and your entire team a very happy Diwali from all of us here.